What's going on, YouTube? In this video, we're gonna address the pump and dump schemes and stuff specifically you need to watch out for so you don't get caught holding the bag. Let me tell you right now, holding the bag is not fun. If you guys never have, take it from me, I have plenty of times when I had a small account. Now I've grown into the investor I am today and the strategies I implement to be very successful. Nevertheless, I see people just piling into penny stocks, any stock that is the new hype, the new craze, and there's like 10 to 20 of them. FUBU, Palantir, BB, BlackBerry, GameStop, like the list goes on and on and on. So with that being said, this video really is mainly going to be about what strategy you guys can use to profit off of it, because that's what comes down to it, right? This is a great opportunity to profit on it, but you cannot get caught holding the bag. Like I said, profit on it. But to profit on it, you have to have a trading strategy. You cannot go in blind with zero guidance and expect to make money. It is sharks out here. It is a pack of wolves, and you are the damn deer. Like, excuse my language, but that's just how it is. So you guys really just need to learn the strategy. And this is what we're really going to try to hone in on this video, is the strategy. Because I've been making a killing. My account was up $2,200 today. I played all those companies, but I'm able to trade these stocks and play the momentum, and everybody FOMOing in. If you don't know what FOMO is, then you might have it. It's fear of missing out. Now, you do not want FOMO, but nobody wants to miss out on the runs. I don't recommend you miss out on the runs. Everybody should get in on that. If everybody's buying it, half of you are going to get caught holding the bag, half are going to make money, you know, statistically. Now, the first strategy I like to use, I'm not going in order on the ones I use the most often and that work the best, but this is the safest strategy you can use to make a lot of money and keep a lot of money. So let's look at the play I made on Palantir today. I opened this today in Palantir and I closed this today in Palantir. Even though it's still open, I already booked the profit and I keep more profit on the table. So if we get into it, at first today I bought Palantir, the $45 call, right? So I bought that at 11 hours ago at 11:11 a.m. Oh, that's weird. 11:11 a.m. And then I actually see I didn't make initial profit on this. Yes, it was profitable today and I came away with a profit, but I should have waited to ghetto spread it. But I bought the $45 call at 625. And I'll tell you the reason why I did it. So if you're curious, you'll know that this is actually a great trade. So I bought this at 625 at 11:11, and then I sold the $50 one on the same strike price, the $50 one, for 560. So what's that? A 40? That's $65 difference, right? So really, this trade, worst comes to worst, I'll lose $65 if Palantir is not over $50 by January 21st, 2022. Now, I think Palantir will, that's why I hold shares in the long term. I think Palantir will be close to $100 by this time next year. So my max gain on this, from this point, from this standard, would be $65 into $500. And I am still up a premium from where I bought it. So I made $50 because you keep the spread between here, and you can cash it out at any time. There's, you just go to here, go options. If you guys don't know, I'll show you, and then do the buy. So basically the opposites. So you'd buy this one and then sell this one. And total credit 115. The bid to ask can be a little messed up here, but I probably would have got filled on this, because if somebody believed in Palantir, why wouldn't you bet that it would be over $50 next year? Some of you FOMO traders know of BlackBerry, and I just call you guys FOMO traders because you just got to realize what it is. The first step to solving it is realizing that you have it. If you don't know why you bought a company and you have no trading strategy, you think it's the next big thing, or you just want to buy it at any price, no risk management, no reconciliation, no nothing thought process, then you have FOMO, my friend, and you just got to learn to control it. So that's why I say that. Don't take it too offensively. It's not supposed to be. But BlackBerry insiders unload shares amid biggest rally in 21 years. Now, keep in mind, they say unload shares. That's not selling shares. They sold a couple shares. They unloaded shares. So if the CEO and the rest of the company's employees, damn near, I'm sure, are selling their shares, you should not be buying them. You should not be buying the bag if the business is the same from a couple days ago. The second strategy I'm talking about is quick flips. Now, when you see a stock, and especially today, it was super easy to see that all the speculative stocks were shooting up. And I don't really mean speculative. These aren't as speculative. They're just not the greatest companies. They're not grade A companies. They're like C's. They're like not delisted status, but they're like a C. They're not something you really want to own long term. No matter what the share price is, that doesn't change what happened at the company today or yesterday or the next day. It's still the same stuff for the most part, right? So BlackBerry is a great example of a quick flip, and this was actually a quick flip fail. So I'll show you guys exactly what happened. Robinhood screwed me so bad. So bad. I'm still mad about it, but I tried to get two of these because it's all about risk management, right? I should have went bigger. For 69 bucks, I tried to get it at, oh, it doesn't tell me. What? It doesn't tell me? Anyways, look, you could see I tried. It was early. It was when BlackBerry was still like 15 cents negative on the day. So I tried to get them at 69, tried to get them at 70. These were within seconds, and this whole thing was probably 2 minutes. I tried to just get filled. And then 70, and then 77, and then 70 again, and then 77, and then 90. And then after that, it was too risky for my risk management. The BlackBerry January 29th options that I had, the $14 calls, any price that I just priorly showed you would have been a good price for the options, and I tried to get filled on them, but it just wouldn't do it. And you could see at a high it hit 205. So with all about risk management, if I had bought those at 69, 70 bucks, then I would have made 130, 135 each contract. I would have made 270 just like that in 2 minutes. So just all about risk management, guys. And I'm gonna wrap this video up here because it is getting very late and the baby is crying. So with that being said, if you guys like this kind of content, I'm going to make a further in-depth video about these strategies, but this was kind of to get your mind working, because I can only explain these so much when it comes down to it. You kind of have to experiment and implement them on a smaller scale. So now with that being said, I'm going to make a video more in-depth about these strategies probably tomorrow, someday over the weekend, if not tomorrow, Sunday, so you guys can experiment and implement these in your own trading strategy. So with that being said, I hope you guys have a great night and a great weekend, and I will see you guys in the next video. Peace out.